trading at its best.
This is going to be part one. Okay, this is trading plan part one. We're gonna go in and actually define what a trading plan is, and hopefully do a pretty sound explanation as to what having a trading plan is, why it's important, and gather some information so that the next time that we meet together, and you get to watch the next video, of course, if you're watching it as a recording, it might be 5 minutes later. But despite the fact that it could be just a few minutes later if you're watching a recording, or if it's an entire week, as we're doing this on every Friday, what I would ask of you is that you take a break in between these two and define some things at the end of this webinar as far as what you're going to do or how you're going to approach things, and I'll go into it a little bit further here. To start out, I know everybody's heard this a million times, and this is literally just going to be, it's going to be very redundant. You're tired of hearing it, but it's one of those things that people just don't do. Okay? You fail to plan. What's it mean? It means that you're planning to fail. And it's ridiculous to repeat that because everybody knows it. They've heard it. They're sick of it. But it is what it is. It's something that you have to consider when you get into trading. If you don't plan out what you're doing and know what you're going to do at any given instance, that's where people fail. They don't have a plan A, a plan B. They don't have a plan. Most people don't have a plan A. They just jump in there and they say, well, I'm going to be this or I'm going to do that. And that's where people fall short of any expectation that they could have had of themselves. And so this is, I think, an appropriate little comic here, or picture. How are we going to get out of it? How are we going to get out of here? We'll dig our way out. It's brilliant, right? No, dig up, stupid. This is so accurate. I had to share this because when you've seen so many traders jump into Forex with little to no consideration of what their actions are going to do from one day to the next, it's so common to see people just digging deeper and deeper and deeper, and that's why Forex is what it is. Some people feel like it's a bottomless pit. They just keep going. I had an old boss that years and years ago, when I was contracting before I started doing things on my own a little bit, he said, you know, you want to get ahead, the first thing you got to start doing is you got to stop digging. You want to get out of the hole, you have to stop digging. That's the first thing that you have to do. And you got to think things through. And so you have to write a trade plan. You have to figure that out. So we're going to define exactly what a trade plan is today and kind of go into it here. Okay, something to consider. One of the many reasons that 90 plus, some people say 95%, some people say 88.7, whatever your definition of how many people fail trading, whatever it is, I'm going to say it's around 90% of traders are not profitable trading Forex is because they jump into the market unprepared. They don't know what they're doing. They go in without having done their due diligence or their homework, their analysis, education. They don't have any of that. They feel like, well, I've got a pretty good eye for things, or I have a pretty good understanding as to what I need to do in any given situation. I know that you want to buy the bottom, sell tops. I mean, they go in with that kind of a mentality. Forex is such a dynamic market, and there's so many different variables that play into it that you just can't take that approach. This is my analogy. I love the ocean. I love water, so I had to bring water back into it like I have in previous modules. This is your, and of course this is photoshopped, I'm sure, but I doubt that great white shark thinks it's a porpoise or a dolphin, but this is what it is. Jumping in the market, you don't know what's going on, you're not ready for it, and there's such a big difference between actually having a trading plan and going in knowing what you're up against. It makes all the difference in the world. It might take a relatively uncomfortable situation and make it a complete blast. You might have a lot more fun, and that's what I would interject is say, if you want to enjoy trading Forex, you have to have a trading plan. That's all there is to it. It's very simple. People that have one, whether every day is a fulfillment of what they were hoping for and their goals and their target their targets and everything else, whether that's taking place on a daily basis and they're feeling like they've actually accomplished what they've sought out to do, or whether they just made it by and minimized the kind of losses and things that they could have run into if they were unprepared, it doesn't matter. The fact is that your results are going to be better with the trading plan. So we're going to go into definition, of course, and I'm a fan of Investopedia, and I think anybody that's getting into it should. There's these are simple, very easy to define definitions because they do a good job of putting it together. And I want anybody that's just starting to trade, when you hear something that you don't know, it's not a bad idea to go look it up and just find out what it means. So we're going to define trading plan. Trading plan is, to actually have a trading plan, it's a systemic method for screening and evaluating Forex or stocks, okay, determining the amount of risk that is or should be taken, and formulating short and long-term investment objectives. A successful trading plan will also involve details like the type of trading system to use. Okay, now trading system or the type of trading strategy you're taking, depending upon how you're approaching it. Most plans require the use of various types of technical analysis tools. We're going to go into this a little bit more, but that's what it is. It's a systemic method for screening and evaluating, your Forex, what you're doing, your pairs, your charts, whatever your currency pairs are, determining the amount of risk that you're going to take or should be taking, and then formulating that short-term and long-term. You have to determine both short-term and long-term objectives. You've got to figure out what those things are. If they're not defined, you're not going to run into them. You're not going to make it to those. And then they can say a successful trading plan will also involve details like the type of trading system to be used, and then most plans require the use of various types of technical analysis tools. Okay. Now, this is back to the 101 level here, and that's where we try to keep it in these webinars. But it's very, very simple. It's an easy one to understand, but it's one to consider. It's one to make sense of before you push forward doing anything trading Forex. The first thing is, in this equation, you need to learn how to create that trading plan. I call it trained planning. So if you've been trained or you've been instructed or you've seen how to create a trading plan, then it should come together and it should fit everything from your trading profile to how you approach the markets and what your personality is like, what your schedule is like, and these are all things that we'll go into. And then the other half of it is, of course, we talked in the last module a little bit about timing, but execution. So you've got planning and execution. There's only two sides of the equation. It's very simple. This isn't some crazy thing we're going to get into, but that's the bottom line. It's very easy. Trained planning plus properly timed execution equals profitable trader. You want to look like that goofy guy making good money. That's what it is. Everybody gets into Forex to make money. Okay. We've spent a little bit of time in previous webinars for the one when we talked a little bit about different things from different systems that are out there. We did kind of a maybe a little premature introduction into TUT and Momentix and some different systems out there that really the reason that we took that direction and made a little bit of a detour there is because we had a lot of requests and people wanting to see, people really wanting to see what some of the software was that we were using and introducing. So, but we're going to try and stay on track as much as we possibly can, and these webinars, of course, are being recorded again. Okay, very simple. Trained planning. You know what you're doing. You've learned how to write that trading plan, and you put it together, and it covers all the things that you need to consider so that when you get to that point, to that fork in the road, and you have to start making imperative decisions while you're in the charts executing trades, you're ready for it. Properly timed execution. So two sides, planning and execution. I put properly timed in there is mainly because when you're getting into the markets it's imperative, and that should be part of your trading plan. It should be very simple. Okay, now we talked a little bit last module, in Module 6, we talked a little bit about calendars and about kind of getting ready for what we're going into today, which is defining what a trading plan is. So how many of you, out of curiosity, how many of you did your homework and looked at a calendar and actually jumped in and said, okay, this is what my schedule looks like, this is when I can trade, and then maybe even considered this is what's happening in the markets during those times? How many of you actually had a chance to do that? Go to the chat box if you would. If you had a chance to, if you were part of Module 6 and you had a chance to go in and look at the calendar, consider times, and kind of set aside dedicated times where you say, hey, I'm in the charts. Don't bug me. I'm in the charts. I'm trading. Just let me focus on this stuff because I'm going to get it. Okay, we have a couple of people that said they did, and some that said that they didn't make the last module. Okay, a good amount of people did. That's excellent. Okay, so it's something to consider, right? You probably looked at the calendar and you determined pretty quickly that there's a lot of different things that you have to take into consideration when you're trading, and it's huge. We have someone that says 24/7, 365. Wouldn't it be nice to be retired and just be able to do it whenever? See, now here's the problem. It's that even though that's superhero mode, okay, in the trading world, 24/7, 365. That sounds like Mike Swanson sometimes. That guy doesn't sleep sometimes. However, you got to consider how long you can actually trade. I've seen people that have said, oh, I'm going to trade this time and this time, and I look at it, and the very first thing that I noticed is there's no way that they're going to be able to trade that much time. I knew it was in their schedule. In the middle of the day, they were going helping someone, I think a family member or something, build an outside garage, and they said, oh, it's going to be a pain in the butt, it's going to be so much work, I'm going to be worn out. And then he tells me that he's going to go back, he's going to trade for 3 hours after that, and I thought, you just planned to fail. That's not going to happen. You're going to get stuck in some trade. It's going to open on a gap completely against you in the wrong direction. You're going to wish you never sat down and executed the trade. That's one of those things that you have to it's one of those things that you have to really consider. That sounds like retired to you. So it's something you have to consider, guys. It's easy to overlook, but you have to consider it. So it looks like everybody's doing okay. We've got a number of you are. Those of you that haven't figured out the scheduling side of trading, it's going to make a big difference in your trading. I promise. If you set aside the time and you say, uninterrupted, I'm going to be analyzing, looking at the charts, digging into it, really making sense of it, that's how you're going to get there. You have to kind of get rid of distractions, everything else, and focus on it. Okay, even a little preparation can go a long ways. So some of you have done okay. For those of you that haven't, I encourage you to pull out a calendar, maybe on your computer, maybe print one off, like this guy here. You go to one of these websites, and there's free calendars all over the place, so no excuses. Okay, so one of the things that you have to consider in what you're doing, we talked a little bit about this, when we're going into a trading plan, you have to consider not only your schedule, okay, and defining this stuff, you have to consider what kind of trading style you are going to use in any given approach. It doesn't make much sense if you go and you say, okay, I'm going to trade the Euro US, and I'm going to trade it on the 4-hour chart, and then say, okay, I'm going to go on and trade the pound yen and do it on the minute chart. and going, I'm gonna go try and scalp something here, and it doesn't make a whole lot of sense if the time that you're going to spend in the trades don't match up at all. Now that doesn't go to say that you don't look through and analyze the larger charts, looking for long-term trends, and then going down into the smaller charts. I used to have the opinion that you could have the most fun trading the 1 and 5 minute. Now that's obviously lack of experience. When I first got started, that was the first thing that I tried doing, was jumping in. I thought, oh, this is easy. This is fast acting, fast pace. Everything's moving, really quickly. There's a lot going on, and I could jump in and I could be a scalper. and it's funny because let me just ask, and I'm going to pick on you guys a little bit, but how many scalpers do we have in the group, out of curiosity? How many people do we have with us that would define themselves as scalpers? And don't be ashamed, because I still kind of define myself, identify with scalpers. So I like jumping in and getting small, hitting small targets and getting in and out. We don't have. I think that's where I'm going with this. Scalping is where a lot of new traders identify themselves. They find themselves, that's home base. It's so easy to say, well, I'm a scalper. And generally speaking, I think it's fair to say that a lot of beginning traders will identify with scalping because there's a lack of information there. They're missing a lot of the other information. And I'm not saying I've got everything figured out. No, I'm not going that direction. But I have to say that a lot of people take that stance and that approach. Day traders. How many day traders do we have in here? How many people can go in and spend a good chunk of the day trading, or in other words, they don't want to jump into a trade, necessarily jump right out of it, but at the same time they don't want necessarily a position trade or something long term. Not even a swing trader really, but really, okay, we got a good number. So a lot of day traders. And I think if you can identify with the day trader kind of lifestyle, and this is going out on a limb a little bit, but I would almost go to as far as saying, as traders, really what style or what type of a trader someone is very much contingent upon their lifestyle. That's what demands or dictates what you're capable of doing in your schedule and timing. Now, each one of these, keep in mind, be considerate of the bottom line here. What potential are you looking for in your plan? I mean, what kind of potential? What are you trying to get? And it might be on a daily basis. Keep in mind, we mentioned before that we have to look at short term in that definition by Investopedia. We have to look at short term. We have to look at long term, and they might be very similar. However, we have to consider that. I mean, that shouldn't be similar, I should say. The short term should be quite different than long term. Long term should be quite a bit more. But I'm saying from scalper to day trader to even swing trader. Now, how many swing traders do we have in here? Come on, guys. Represent, as they say. Let's see how many swing traders we have. Not many. Not many. We have a couple. We have a couple. Okay. Well, so swing trading. Once again, you've got to consider. I mean, swing traders, you're probably looking at the H4. You're probably looking at trading somewhere around the 4-hour time frame, or you're trying to pick up and catch some trades, and you're not so dependent or worried about one day to the next. You're not bound by the end of business. On any given day, you're out. You're fully out of it, like a day trader would be. Okay, so we've only got a couple. Now, how many? And I rarely see any position traders, but how many of you just don't have a whole lot of time to trade Forex, and you like to jump in? You like to be a position trader. It's kind of almost a stocks mentality. You jump in there, and maybe you're in for the long haul. Who knows? But you're you're willing and ready to make that trade and sit on it until it goes the direction you want it to. Or if you've done the proper analysis, the direction you know it's going. See, I don't have a position trader in here. No big surprise. Okay. So once again, keep in mind what your potential is going to be in any one of these. So, for example, like I mentioned, if you're just starting trading and you're a scalper, and you say, well, I don't have tons of time to trade, and it doesn't necessarily mean that a scalper doesn't mean that you don't have a lot of time to trade necessarily, but just that you like to go in, and before the markets can toss you like a big wave in the ocean, you want out. You want to get in, get out. You're going to grab those small waves so it doesn't drown you. Okay. Excuse the surfing analogies here, but it's one of those where you're to try and go in, grab as many pips as you can, and if it's going against you, no big deal. You bug out. You're done. Okay. That might be how you're doing it. Maybe you're looking at taking scalp trades a day, and you're looking at your long term as hitting anywhere from 100 to 1,000 pips a month. Maybe you're looking for more than that. But if someone hears 1,000 pips and your ears perk up and you're thinking, I want 1,000 pips in one trade, you're probably not going to be a scalper unless you're trading the news and there's something crazy going on. But consider how much you're looking for. Generally speaking, the longer, bigger trades and the higher time frames are a little bit more stable. Okay, so let's go into a little bit more. Investopedia, we're going to go into the explanation that they give for a trading plan. Trading plans can involve any level of risk and accomplish many different investment objectives. Good trading plans will also provide guidance on trading strategies for stop losses. Diversification and flexibility are other important factors to consider. So what does this go to say? What does this say as far as what your trading plan is? How many of you, when you look at this definition, how many of you that have had a trading plan in the past can make perfect sense and say, hey, I line right up with this. I consider these things. I consider everything from exactly what my stop losses are going to be. I know what my objective is, and I've got a clear map as to how to get there and how I'm going to do it. How many of you feel very comfortable with what your trading plan is in the past? How many of you have had a trading plan in the past? Go to the chat box for me. I'd really like to see how many people have tried writing a trading plan. I've got some definitelys. Yes, yes, yes. Okay. No. Okay. Is there anyone in here that has had a trading plan? And let me ask this. I have James that said definitely. James, do you have a microphone, and would you mind if I picked on you for a quick second? Let's see if James has got a microphone. Okay, no mic. Okay. You say definitely. Have you ever traded, James, without a microphone? Or excuse me, without a trading plan? You probably don't care about trading with a microphone. Okay, so you've never traded without a trading plan. So my next question is this. Okay, James says, when I first started. Okay, so he says no, but he says when I first started. Well, when everybody first starts, that was the basic plan. And it's kind of goes back to the fail to plan, plan to fail. And for some people, like James probably very quickly figured out that it was not, he wasn't going to cut it without having a trading plan, and came across someone, I would say relatively soon in his trading career, and made the determination that he needed to do that. He says he had a basic plan, but now it's more intricate. Perfect. So that's a good example, James. Thanks for sharing that. So that's what we're talking about here. Is we're talking about the different kind of things that you need to consider, and really that's what this is. This webinar, I want everybody just to consider. I want everybody to kind of consider some of these things. Everything from what your trade style is, like literally, what kind of trades do you want to be taking? Okay. You have to consider different analysis side of things too. I mean, for example, if you're going in and you're scalping, or let's say you're going in and you're day trading. Okay, here's an example. Someone is a day trader. They get in at a certain time, and they're going to spend several hours trading. But what if they jump into a trade and they're at the tail end of any activity in the market, and the market goes sideways, and then the amount of time that they've planned to trade is right before, let's say, the London Open. So let's say they're sitting on consolidation for whatever currency pair it is that's not going to move, and they haven't considered that. They haven't thought of, oh, well, I'm going to do this. I'm going to take this kind of trade. I'm going to be in there as much. Now, I know that's not entirely what a day trader is, but let's say you have that much time, and generally speaking, it's someone that goes in when the market's open and gets out when the market's closed. But let's say you're trading and you're trying to take that approach where you're going to go and you're going to trade for several hours, and it's just going to be flat. I made this mistake. Pretty hard, and it took me a while to learn from it too, because I also found myself jumping in the markets on Fridays before the markets closed and getting into trades that I had no business jumping into, and it drove me nuts, because every once in a while it'd open up on a gap or something, and I'd see some big movement, and I got lucky. It was in my direction. But all bets are off sometimes when you go that direction if you haven't done the analysis and you don't know what to expect. Maybe there's news, maybe there's a lot of different factors to consider, and that's a whole other webinar, is the analysis side of things. But you have to be considerate of what kind of trader you're going to be and how you're going to approach things. The other thing to consider, once again, is your schedule and how you're going to fit all this stuff in. So the other thing that I didn't really put in here that I want you to consider is currency pairs. Go back to James. James, in your trading plan, how many different currency pairs do you have included in your trading plan? And let me just first say, this is opinion, but I will say that anyone that has a trading plan that consists specifically of one currency pair, and because, of course, a lot of gurus and instructors out there will say, focus on one currency pair, learn that currency pair. Now, I'm not denying that. I think it's very important that when you're learning different currency pairs, you kind of have to get a pulse, so to speak, on any pair. Doesn't matter what the symbol is. Get a pulse on it. Know what it's doing. However, I think anybody that goes in and creates a plan, an entire trading plan around one currency pair, what are you doing? You're kind of setting yourself up for disappointment. You're putting yourself in a position where you're so set on trading your plan and actually executing that plan that you get in the markets, you've been watching that pair, and despite the fact that you're not seeing any indication of getting into a trade that you want to with that pair, you're going to do it because you've got goals set. You want to reach those goals, and you're not going to reach goals if you don't execute trades. It's a mistake. So I don't know how many different currency pairs you guys, those of you that are already trading a trading plan. I'm going to say it varies. I think it just depends on who it is. In my own opinion, this is my personal opinion, I think the minimum number of currency pairs, and I think this is low, but I think you should have a minimum of at least 4 pairs that you're looking at. Okay, so once again, we're just trying to define the importance of a trading plan and what things to consider. I had to put someone in there for meditating just to kind of paint or illustrate that mental picture for you. Okay, so what are involved in writing a trading plan? Let's get kind of an idea, you guys. Let's see on the feedback side what different factors can you guys have that are important. Maybe not absolutely imperative. You have to have them, but what are some things to consider in a trading plan? Okay, we've got daily goals. That's right. When you're going to get into it, okay, there's some good answers coming across. Details. Okay, So I'm kind of assuming that the details that that you're referring to is probably well, some of the stuff. Let's go into it. So thoughtful consideration, the things that we're going to be thinking about as we're getting ready to put together our trading plan. Of course, you want to know which currency pairs. What are you guys trading? What specifically are you focusing on? Because when you go from one currency pair to another, it's going to be almost a different trading plan. So you have to consider that. You're not going to treat the pound yen the same way that you're going to treat the US CAD. It's not going to be the same approach. It's going to be something very different, most likely. Now they might be trending in a similar way, or there might be some shared characteristics of what it's doing or what it's acting like at any given time, but you've got to consider that that's going to change. So you have to be able to write down the specific things that you're going to write your trading plan around within each one of those currency pairs. Carlos says stops, limits, currencies, account size, percentage of risk, money management. Dang it, he's getting ahead of us. Okay, whoops, and we've got an abbreviated schedule there, your schedule. Okay, be mindful of when currencies move. Your risk threshold. Okay, these are all the things that Carlos has mentioned there. Okay, we've got goals. Now goals are something to consider, of course. You have to consider your account size, like he says. You have to consider your leverage even is something to consider. These are all things to consider. Money management, okay. Carlos also mentioned money management. Your targets, your stops. So these are just some examples of the things that you have to consider. What your trading plan is, by simple definition, is it's a map. It's like a treasure map. Okay, this is a cheesy analogy, but I'm going to use it. It's a treasure map. Let's face it, you got into this. What really piqued your interest in Forex is that at the end of this little dotted line across this little treasure map of Forex, there's a treasure chest. There's money there that you know that you're going to be able to achieve if you follow your map. And that's just the idea, is that you've got to get from point A to point B, B being your goal and making the kind of money that you want to see on a daily, weekly, or monthly basis, maybe just yearly. That's how you're going to get there. James says profit targets. Exactly. So these are things that you have to consider. So be considerate of the different factors that are going to play into your trading plan. Okay. So, like I mentioned, I didn't want to make this webinar too. I didn't want to take too much time in this webinar because I want it to flow pretty quickly from the part one, where we define it, we kind of explain what it is, into actually writing that trading plan, and that's going to be our next webinar next Friday. But I want you. This is going to be your homework. I want you to decide what pairs you want to write a plan for. Okay. So right now, if it's easier to do it now while you're thinking about it, go in and grab a piece of paper or write it down, pull out a notepad, make some determinations and some decisions, and it can change. You might find now that you look at a certain currency pair, with what I want to do. But go anywhere from 4 to 12. I would say, in my opinion, I'd grab maybe 6 different currency pairs that, just by recommendation, that makes sense. Also, consider when you're doing that, consider the correlation between pairs. Okay? So when we're talking about correlation, we're talking about how, for example, the Great British Pound is going to be correlated with the euro. You're going to see a lot of similar movements between the euro-US and then the pound-dollar. You're going to see some similar things happen because of that correlation. Okay, and a lot of that movement is going to be, to some extent, mirrored and similar to that other correlating pair. So be considerate of that when you go in. And sometimes I've seen people that'll go in and they'll say, you know what, I like the movement. I like some of the different aspects of the yen, and I'm going to go in and I'm going to learn inside and out what the yen is going to be. I would rather someone say, okay, I'm going to learn one specific currency pair, and it doesn't matter which pairs I'm looking at per se. I don't mean one currency pair. One currency that's in each one of the pairs that I'm picking, and focus on just learning that one currency and knowing what it does with these other currencies. Okay, and there's nothing wrong with that. You can do that, and it makes sense in my opinion. It's better than saying I'm just going to learn one currency pair, like the euro-US dollar. Everybody's trading it. It's going to be so easy to trade. There's a lot of information out there about it. I would avoid that. Find at least something. Get at least 4 to 12. Second thing we're going to ask you to do is decide when you're going to be able to actually trade. Focused, not just something that not one of these times where you say, okay, hey, I'm going to go in and now I know that the basketball game's going to be on, and I'm going to be doing this. I'm going to make a focus of this or that. Okay. We've got Carlos that's just making a point. He's talking about he's sharing a link here. We'll grab Carlos's link here. This is it's funny that Carlos, that you bring this up, because it is one that it's one that we actually use. This is Oanda. Now keep in mind, Oanda is a broker that's been around for they're going on 15 years, if I'm not mistaken. But they've been around for a good while. And what he's just shared, and this is something we'll probably jump into a little bit more when we go into the analysis side of things. But like heat maps and activity reports and things like this, there's a lot of different information that we can draw on, and we'll go a little bit further into it. But this is a good example. Carlos, thanks for bringing that up. Okay, so decide when you're going to be able to trade, when you're actually going to be able to be focused and trading. Third thing I want you to do is decide what trading style you're likely going to adopt for starting your trading. The first maybe approach, or the amount of time, kind of the idea is to when and how long you'll be in the markets. What your objective is, really. Is it to jump in and grab 10 pips twice a day real quick? If so, you're probably going to say I'm going to attempt the scalping approach. If you don't like getting stuck in trades and sitting around waiting to see what happens to them, that's probably the right direction you're going to go. If you're a day trader, all these different characteristics play into it. It's something to consider. The fourth thing that I want you to consider is how much time you're going to be able to spend writing your trading plan on a regular basis. I want you to think about this for just a second. Okay, so what I'm saying and what I'm trying to explain here is this. Has anyone ever created a I'm going to go to the exercise world. Okay, my wife used to be a personal trainer, and let's see if you guys know. But when can you guess gyms like Gold's Gym or any other physical fitness gym? When can you guess those gyms are near capacity? I know some of you guys have got to figure this out. This is maybe you all have gyms in your home. Okay, Ray hit it right on the head. Okay, so January, right? Beginning of a brand new year. It's just kind of the startup. Carlos says beach time. Too, huh? So it could be summer, like right before summer, one of there. But generally speaking, gyms are very near capacity in spring. And I want you to consider this because there's a lot of comparisons between how brokers and Forex works with gyms, believe it or not. And it sounds kind of ridiculous, but there's a lot of this. It happens pretty regularly. This fourth one here I've offset a little bit. I want you to realize this is one of the most important things to consider right here. Okay, you got to consider how much time you're going to actually spend writing out your trading plan, because this is going to change. It's not going to be one static plan that just you write it when you're getting started trading and you stick to it until the cows come home. It's not going to be that. It's going to evolve. You're going to learn more and you're going to perfect it. And when you get it to the point where it makes perfect sense to you, you're no longer even necessarily writing it. It makes sense too, but I've seen traders that I've talked to that say, hey, you know, that have been trading for 20, 30 years. Now they're doing Forex, and they say, you know, I know every aspect of my trading plan because I have it memorized. I've got it perfect to where I want it, and if I rewrite something, and the only time sometimes I guess that they would change something is if, or add to it, is if there's an actual change. Then they go back to the drawing board and they write it down. Okay, that might only happen every couple of years. But consider how much time you're willing and able to actually be writing this, because it's going to be something that you need to do on a regular basis. How many of you guys have heard of spending 2 minutes planning your trades and then 2 hours trading that little plan that you created? We've got someone that says that's still what I'm doing, and it doesn't surprise me, because there's a lot of people out there that will create and develop that trading plan. They've got an idea as to what's going to work. It's a 2 minute, very quick. They plan out what they're doing for 2 minutes, and then they spend 2 hours in the markets. What happens to those traders? They can't survive the volatility. They can't withstand the different the different things that they're hit with during the day, and it doesn't work. It doesn't work long term. So you have to consider how much time you're willing to spend. It really should be the type of thing where you plan for 2 hours and you're in the markets for, maybe it's an hour, maybe it's, so you got to consider, comparatively speaking, the more time that you plan things out and you know what you're going to do, the more likely it's going to take nature and you're going to trade your plan. That's all there is to it. Okay, guys, once again we're kind of at the end of this. I mentioned I wanted to kind of shorten today's webinar because there's a lot of things that I want people to put together, and we've talked pretty extensively about what things you need to consider. Carlos pointed out several of them there that we talked about in the last slide in special consideration, where we have someone meditating in the sunset. But I want you really to consider these different attributes and these different factors that really play such a big part in how you're going to do this. There's the only way that you guys are going to be able to succeed with a trading plan is if it becomes second nature enough to where not only are you afraid to make changes to it because you've realized that there's a flaw in your plan, or you know what, it might not even be necessarily a flaw. It could be a flaw now, but before maybe it worked perfectly. The markets change, and our trade plans are going to have to change too. But that's the idea, is that taking the time to actually go in and focus on creating a plan on a regular basis, that should be part of your time that you're scheduling for yourself. So that's one of the things that we just want you to consider. Thanks so much for being with us, you guys. We're going to be back Friday. We're going to have the next Forex 101 webinar on Friday. I hope everybody was able to pick up some very important things to consider this next time, because we're going to go in and we're going to start writing our trading plan. So thanks so much for being with us. We appreciate you, and we'll see you next week.